If you haven't noticed, Ethereum has been exploding in price recently, and if you're anything like me and you own any Ether, you're pretty much just refreshing your screen and you're seeing it go up hundreds of dollars. And the question is, why has it been exploding in price? And there might be a reason why. There is an upgrade known as EIP 1559 coming to Ether in July, or that time frame. So in this video, we're going to talk about what that upgrade is and why it may be causing a spike in the price of Ether. If we look at a website like coinmarket.com and look at Ethereum over the past month, it was consolidating around that 2,000 level, and then recently, at the beginning of May, it's just exploded in price, and we're talking about $3,400 per coin right now. But if you take a look at Bitcoin over that same time frame of a month, we're actually down in terms of price. So the high was around 65,000, and we're currently sitting at 54,000, which is pretty surprising. The reason that divergence in price between Bitcoin and Ethereum is surprising is because Bitcoin normally leads the market higher, and there's a high correlation. Once there's a divergence of that correlation, or Ethereum starts outpacing Bitcoin, that is pretty bullish for Ethereum. One thing I usually look at is the Bitcoin dominance over time, and back in January 2018, when the last bull market ended, Bitcoin's dominance fell to the low 30% range. You can see at the beginning of January, Bitcoin dominance was around 70%, and ever since then, it's actually been ticking down, and you can see Ethereum has actually been ticking up. The reason I bring up Bitcoin dominance falling is because of something known as alt season, where Bitcoin starts to underperform and all of the altcoins start to outperform. Now, this divergence that I'm seeing in Bitcoin dominance, this may be the start of alt season and Ethereum's continued outperformance. Now that we covered price, what exactly is this upgrade and how may it actually be helping the price go up? Currently for Ethereum and proof of work, there's transactions that are put into these blocks. The miners have to solve a hashing algorithm to prove that the transactions are real, and they can append it to the blockchain. Now, those transactions, if it spikes in terms of usage of the network, all of a sudden those transactions that want to get through will take time unless those people actually sending the transactions puts a higher miner fee, which basically is a auction system of which transactions will get appended to the blockchain first. Really, to say that in plain English, I mean if you want to get your transaction through as fast as possible, you have to increase the amount of fees that you're paying the miners in order to jump the line. Here's an Ethereum gas chart which shows the fees over time for the Ethereum network. As you can see, there's random spikes. This spike is due to a lot of transactions going through the network, and as the network gets bigger and bigger, there's these random spikes where a ton of usage of Ethereum and the network itself happens, and then all of a sudden people are paying ridiculous transaction fees just to use the network. And since Ethereum is home to a lot of DeFi platforms, you're talking about Maker, Compound, Aave, Uniswap, SushiSwap, as these platforms get more and more usage, the transactions getting clogged in the Ethereum network may increase. So imagine this water with a little bit of Mio in it is the actual Ethereum transaction. So the water itself is the transactions, and then the glass is the block size. So this proposal is saying that we can actually increase the block size. So you can take the transactions, and it's actually not that much different. But anyway, the point is that the block size is more dynamic now, so it can be changed depending on how many transactions are being sent to the Ethereum network. Hopefully by making that block size dynamic, the fees actually flatten out, and so you won't get these random spikes in fees because too many transactions are being built up. Secondly, they want to split up the fees as a base portion and then a tip portion. This base fee is going to be calculated via an algorithm, and it's going to be tried to be kept flat. So if the usage is going up, it will slightly increase. If the usage is way down, it will slightly decrease, but it's predictable and it won't have random spikes. Also, this base fee will not go to miners, but it will actually be burned. So that Ethereum, once it's sent for a transaction, will disappear, and actually it will decrease the circulating supply of Ether, which actually should increase the price of Ethereum over time. The second part of the fees is tips, which would go 100% to miners. And this would be in a situation where someone does want the fastest transaction as possible, so they add an extra tip to their base fee, and then a miner will pick that up as fast as possible and will get appended to the blockchain first. Obviously, miners hate this proposal because realistically it would destroy the amount of money that they're making, because right now they can have these huge spikes in transaction fees, and when that happens, the miners are making bank. Whereas if you move to this model, all the base fees get burned and they only make money from tips. And the expected launch date for this new proposal is supposed to be going live in July. So from my understanding, this Ethereum Improvement Plan would be separate from the Ether 2.0 upgrade because one is affecting proof of work, whereas Ether 2.0 is more about staking. So in both situations though, they would actually lock in supply for the Ether 2.0 side of things, and that should basically reduce the amount of selling and put pressure to the upside for the price. Whereas the EIP 1559 should also decrease the supply of Ether in the circulating supply, which would also put upward pressure on the price. In regard to price targets, or what I think this will do for the price, obviously lowering supply would help the price to the upside. If you're locking in Ether for Ether 2.0, it's good for the upside. But in terms of short-term targets, I don't normally have anything. I own a percentage of cryptocurrency as my net worth, and if it gets too large, I trim back a little bit, reinvest into some safer investments. Whereas if we do have a crash, then I can load the boat with more cryptocurrency. But that's just my opinion. Basically, I try to buy when no one cares about cryptocurrency, and then when everyone is kind of euphoric about it, which we're kind of getting there, then I tend to try to trim some profits and keep it still just in case if it keeps on going parabolic and it truly does take over the world of currency. Nonetheless, very exciting developments for the Ethereum space. If you did enjoy this video, give it a thumbs up and consider subscribing to Main Street Wolf, where we talk about cryptocurrency and then other investing topics as well, stock market, options, all that fun stuff. Thanks guys for watching and have a great day.